So the last thing is kind of a current events item, and I grew up around racetracks and old vintage cars, and it's just part of my history is smelling old race fuel and tinkering on things. But one of the racetracks here in California, so there's Chuckwalla, which is just outside of Los Angeles. Came up on my Instagram feed, and Willow Springs is another track that got sold last year. There's been a few of them, and the reason was interesting, and this is what caught me being an insurance nerd, is the president of Thunderhill Raceway, Matt Busby. He said that the insurance costs for these racetracks and track days and all that has gone up so significantly that it's causing a lot of these companies to kind of decide whether or not they want to stay open or just move. And then furthermore, when they do go through a buy-sell process on those tracks, they typically are doubling or tripling, the hourly rates that you're either on the track or just being able to be part of it. So I've seen this happen too with like a lot of like BMX tracks. Like there's one up in Temecula. They had to shut down. They actually had an incident, so that's a whole nother conversation. But, it put them out of business, right? And they had to go find a buyer, and it was a whole thing. But I'm talking to two of the most respected brokers in my world. I'm curious, obviously insurance is changing the landscape on this, but do you think that it's unavoidable for these insurance costs to go up? Or how would you tell a company that's like looking at these cost increases, like how would you, I guess, guide them through the next steps of, look, you don't have to sell something that you've worked really hard to build just because of insurance. And that shouldn't be the only reason, but how would you walk someone through that thought process? And I know it's kind of a tough question, but as soon as I saw this last night, I was like, I have to ask you guys about what you would do in this situation if they were a client.
You want to take that first, Matthew, and apply your mountain
Sure.
biking knowledge?
Well, that's a hard one because there's so many variables to it.
I know there is. I'm just kind of I guess I was going to throw you guys a fastball.
So I would say, we had to do a lot of that back in 2000, like through COVID, and when it started to increase, we had no idea where this was going. People were talking about how am I going to afford to be in business and so forth. So I guess the number one thing that came out of my mouth was reevaluate your sales plan, because it's always a domino effect. It reaches from wholesale to retail to us, right? So no matter how you look through history, everything changes and goes up. It's just a matter of how far can you push it before you have no business.
Right.
So for those who are on the fast track and saw that at the very beginning, they were trying to figure out how to do that part. And that was probably, I think, the key to their success. Whether I needed to put an apple or, to purchase an apple instead of 99 cents a pound, now it's $1.59 a pound. How do you get there? Because that's a big gap for a lot of people who can't afford groceries all the time, and that's what they live off of, those type of people. So, gas prices went up drastically. So now how far do I go on vacation? All of that came involved, and it went back to us as the consumer. So some are unavoidable. I think the big, huge ones, like you said, if there's a death, they didn't have enough coverage, it's unavoidable. They're going to feel the pain and might have to shut down. For those who are barely touching it, just forecast, and you need to think outside the box and bounce it off of people, whether it's myself, whether it's their friends. I just tell them to keep bouncing off, because that idea is going to come. Maybe it's marketing a different way. But I think in reality, I think Mike said this a long time ago, no matter what the market is, we just have to figure it out, because there's always business out there. So for someone who wants to ride a bike, you're always going to want to ride a bike somewhere. It don't matter what the cost is, just might not do it too many times. So now vast out the marketing plan.
Yeah.
So that's how I kind of see it. I think everyone could stay in business if they do it the right way.
And I think that's a good answer. I think in kind of building off of that and asking Mike now is what levers could a larger company pull on to maybe help with that insurance relief, right? Obviously, there's the business plan part that Matthew's talking about, which insurance, that's part of the conversation that us brokers would like to have, and understanding kind of your whole risk layout and how things are rolling. But what are some levers that you can pull as a company if you're trying to change how your insurance is either perceived or priced?
Yeah. And I know the question, or make sure I understand it. Do you want it framed in like the Chuckwalla Raceway?
Well, so like I came across that as sort of the inception point for this. And because I really am thinking through like the whole program for a company with insurance, because I've sat on the other side, right? And we had to go to captive markets, and it was different because I had to go to 4 or 5 different captives. We had to have an attorney group come in and like help us vet these programs because you never knew what was really included or excluded.
Yeah.
And it's just different because for us as brokers, like we get to go to all these carriers and generally, sort of sort through those, right? But seeing Chuck Wallet change, like I've been to that track before. Like I've been there, and it's kind of like this thing where you nostalgically look back and you're like, man, they might have to shut it down, or it might not even be operating. And that would be just a big hit for all the people that like race cars, right? And so that's sort of the impetus for it. But as you're sitting there and you're thinking about how do I manage my insurance better as a company, obviously cost is a big piece of the conversation, right? Coverage is also important, but for maybe I think you can kind of have both, and there's levers you can pull with the costs to sort of negotiate or put yourself in a better position. So what are some of those things that we would advise if Chuck Wall was a client, let's just say, right, and said, hey, we really don't want to sell this, but our insurance is killing us. Like, what can we do about this? Like, so what are some of the things that we would do as a broker and say, here's what we would advise?
Yeah. And Matthew kind of touched on this before in an earlier response with a general contractor knowing what their cost per hour is when they're bidding on stuff. So, any business, Chuck Waller or anyone else is looking at, what are all our costs, figuring those, adding those things up. How many customers do we have coming through? What are those folks paying? And obviously anyone can open up a business where you lose a bunch of money. That doesn't necessarily take a lot of skill, but skilled operators are the ones who would figure out, all right, here's my costs. Here's what I think the market can bear for that. And if those two aren't in line, then okay, what can I add to my product that will attract more customers or a higher paying customer? How can I innovate? So not that we would have any great responses for someone like the Chuck Wall Raceway, because there's certain things too that it just gets too excessive. And then, that's things like talking to your legislature and stuff like that and getting, why is insurance expensive for raceways? It's because people have the mentality that if something bad happens, it's like a lottery ticket. It's not an accident. And so, was a tort reform would be the proper way. Obviously, that's going to take them a lot of time to do something like that. But that's, again, our society is just driving up those costs for everyone in the business. If you are, specifically to insurance, then you're looking at things like higher deductibles. You're looking very closely at what things you are insuring. And are there certain things that just as a business owner, you're going to have to take that risk back on? Or do you, spend more on risk management and loss prevention? And then in turn, self-insure some of that risk instead of transferring that over to insurance company, you bring that risk back in-house because you're feeling good about what you're doing to mitigate that risk. So things like that, raising deductibles and even eliminating insurance that, there's must-haves like liability, workers' comp, and things like that. And then if you don't have a bank loan, are you self-insuring property? Or are there certain types of coverages that, you got, kind of prioritize what you're doing. You obviously have to make payroll and do certain things like that. But I have a tremendous amount of respect for so many of our clients that have taken that risk of becoming a small business owner. There's no guarantee, there's no paycheck. And for some, it's worked out fantastic and they deserve every bit of what they've earned. But just a lot of respect for all those folks out there that are following the American dream.
Absolutely. Yeah. I know that was a multifaceted thing. I just, every time I see insurance, I think I get pinged by Instagram and says, hey, you need to read this. But so a different direction on the interview than you were probably expecting, Matthew. But either way, I'm just so thankful that I get to talk with both of you guys.